Good morning, everyone. Jesse Webb, TradersPro. Let's take a look at current market conditions. Had a pretty volatile day yesterday in terms of CPI numbers came out, gapped higher, ended up retracing almost all of that, and kind of ended up back at kind of break even for the day. So, interesting market activity. In fact, let's look at that on an SPY chart so you can see what that bar looks like, because we've got this is definitely not a bullish bar. When you see this gap higher and then lower, it's green just because it's still still in the buy zone, but it's black, I should say. It's green because it's in the buy zone, but it's a down day. If I switch this signal over to just candlesticks, so it's just a down day. It gapped higher, opened here, and then traded lower all day long, basically back to support, and then closed, a little bit higher, but slightly off the lows of the day. So the large gap, a lot of times you're going to get that selling as markets open, but we'll see if we get any continuation on that today, either direction. If we kind of get a pause or if we get some acceleration to the downside, it'll be interesting to see. Right here, we still have that slight bullish bias moving to the upside. What was interesting about the price activity is when you're dealing with the CPI numbers, that we're talking about inflation. We're worried about what the Fed's going to be doing here, and so the market is definitely anticipating lower rates because of what the Fed has been doing and slowing the economy. But now what might be interesting is if the market shifts over from what the Fed is doing to what the economy is going to be doing now, because we still are dealing with this yield curve, inverted yield curve. An inverted yield curve is when you have the shorter time frame bond yield, in this case a 1 or 2 year treasury, that is higher than the longer term treasury, the 10-year or the 20-year treasury. So here's a 10-year. So the value, so the ability for you to gather income at 2 years is 4.39. 10 years is 3.61. So the long term, to tie up your money long term, it costs you're earning less money. So this is typically what happens on a yield curve. When it's inverted, you're going to get a recession that follows. And if you look on this chart, if you go back to some of these previous market highs, where you have, this was 2007 and 8, you had a flat or inverted yield curve here, you had one here. But watch this as it's happening to see what ultimately it should look like for bull market continuation. This is a normal looking yield curve. You get shorter term and longer term here. Same here, you get this shorter term yields are lower than the longer term. That's typically a more healthy long-term growth market, which is what the Fed still has to do. Yes, we have inflation at 7.1 instead of 7.3, but it's still 7.1. That's disgustingly high. It needs to be at 2%. So everyone's celebrating, but it's really nothing to celebrate about quite yet, because I think we're going to have a recession, but what does that mean for stocks? Still kind of hard to say. We certainly could go lower from here. History has kind of anticipated that. We'll see if that ends up playing out. Let's go back. So we did have, again, that little market volatility yesterday. Move that buy-sell ratio back to positive again. So just a really schizophrenic market right here, and a lot of volatility. So that means uncertainty. Typically, when you're getting a lot of volatility, there's still some uncertainty in what's going to happen, either with interest rates, inflation, and stocks. So those are still kind of the keynotes. But whether or not we're looking now ahead for recession, the market may be doing that, saying, okay, inflation's now under control, or at least coming back down. It needs to come down. It still needs to come way down. So, and how long has it taken us to get to where we're at now? 3, 4, 5 months or longer of what the Fed's been doing. So we're not out of the woods yet when it comes to the Fed and interest rate discussion and conversation. In terms of that shorter term trend, though, the market's churning higher. It's wanting to go higher, but there's definitely some resistance happening in that. It's still at this location right here where we're talking about just bouncing up against this overhead resistance. Markets hit it and then retraced immediately from there. We'll see if we get any continuation from that today. A couple of stocks to look at for today. If we can move back over to our muscle stock list, a lot of these have that same pattern. I'm going to switch back to signals where things gapped higher and then traded a little bit lower. You've got some transportation stocks in that list today. You've got here's a steel stock that's having a nice breakout, nice trend profile here on this. Also, nice fundamental profile on this. When you see all of these numbers that are green, it just means the company is working as well. It's profitable. It's making money. Return on equity. Things are growing from there. So a couple stocks in the new buy list to take a look at today. Should be an interesting day in the markets. And if you haven't signed up for Traders Pro full access, there's a link for you below. And we look forward to having you. Have a great day today.